Hey everybody, welcome into today's live stream. Hope everyone is doing well on this Tuesday, January 18th. I sound like a radio DJ today, don't I? Welcome in, everybody. It's Donald Fagen's Nightfly. Hey, today we're going to be talking about the housing market in 2022, what we could expect. The demand is still there. So we'll be defining what that looks like as far as rental properties go in 2022. You know, whenever you see these mainstream media news articles, they're typically focused on the retail housing space. Very rarely do we see an article that actually addresses what we do here at Morris Invest and what we teach you to do on this channel, which is invest in real estate and hold cash flowing real estate for the rest of your life. So we're going to be talking about some mainstream news articles that have actually covered this story and have some really interesting data that we will get to. We're going to start the show in just a few moments, but first, I'd like to let all those YouTube alerts go out because it takes about 10 minutes or so for those alerts to go out. So let me know where you're all joining us from. Good morning, Lindsay H. up in the Pacific Northwest. I just finished a little while ago reading a really good thriller novel about the Pacific Northwest. That's where it was set anyway. Up into Big Chief Mountain or something like that. I forget the exact, but anyway. Just raining nonstop in the novel. Is that what it usually rains nonstop there in the Pacific Northwest, Lindsay? I remember, do you ever watch the TV show The Killing? Really good show. It was based on a Swedish show, I think, if I'm not mistaken. Or a Finnish show? I don't know. But in that show, anyway, it was a great show. It was just raining the whole show as they tried to solve this story. Which book? It was a book that I even recommended to my sister. She devoured it as well. It was called Beneath the Devil's Bridge, I believe. Let me look it up here. Let me look it up. And I think the author lives in that neck of the woods. Let me see what it was. Beneath Devil's Bridge by Loreth Ann White. Yeah, it was really good. Love a good thriller. Here's the book I was talking about. Beneath Devil's Bridge. And it takes place up in that neck of the woods. Yeah. Anyway, but the show The Killing, I don't know if you remember that. I think it was a Netflix show. No, it was an AMC show or something. Yeah, it was AMC. Man, Wikipedia is the worst, aren't they? I mean, you cannot trust anything on Wikipedia. Nothing. It's owned by a few billionaires. And it's ridiculous. Oh, now it's on Netflix. If you've never seen The Killing, it's really good. And this guy, I forget his name, but he's excellent. He won, and he's in that Apple TV show about space exploration. I can't think of his name. He's so good. He's so good in this show. If you've not seen The Killing, it's Who Killed Rosie Larson. It's kind of the premise of the show. But it's just raining nonstop. Even look at this. Even the image for the show is rain. Yeah. Ouch. Yeah, what's his name? Joel. What's his name? Stephen Holder. Joel Kinnaman, right? Kinnaman? Joel Kinnaman. He is so good, but he is in that new that Apple TV show about space. What is it called? Can't think of it. But he's so good. It's one of those like when you see an actor like him come along like once every 20 years or something. He's just so good. You don't even think he's an actor. Like he's that good. He's just, especially this character that he plays. Like he's wearing a hoodie. He's got this little mustache going on. And then the Apple TV show, he's an astronaut. He's really good. Jim from Montana. I used to live in Montana. I used to live in Helena, Montana, when I was a young reporter for CBS News. Up in Helena, Montana, I lived about 5 blocks from the Capitol building in Helena, Montana. And it's funny now when I watch Yellowstone and they're in the Capitol all the time. And I'm like, my office was in the Capitol building. What part of Montana are you in, Jim? Or JM? Sorry, JM. Kristen Swenson says, yes, Wikipedia is a lie. Yes. You cannot... any of you believe that you can believe anything on Wikipedia, I've got a bridge to sell you. It's ridiculous. Wikipedia is the worst. Let me see if I can find this Bloomberg piece, and then we're going to get started here in a moment. I just like to let the alerts from YouTube go out. Bill Perdue is here. Good to see you. Jesus Gonzalez is here. Thanks for letting you in, of course. You're in San Ignatius, JM, 40 miles north of Missoula. So I used to go out to Missoula all the time with a couple of friends of mine, one of which who used to play in the NFL, and he graduated from University of Missoula. Was he a Grizzly? Is that I always get him confused. Bozeman Bobcats? Missoula Grizzlies? He was a Grizzly, played for, I think, the Detroit Lions, I think. We were friends, so we'd go out there and watch Grizzly games, and Missoula was fun. All right, let's see here. So if you're just joining us, tuning in, we're going to get started soon. We're going to talk about the housing market in 2022. It's a warm day here. How is it for you guys out there? Let me know in the chat. It's, hey, Lavetta, nice to see you. We have another Missoula. So we've got Lavetta in Missoula, and we've got JM up in 40 miles north of Missoula in San Ignatius. So we got some Montanans in the. Do you guys watch Yellowstone? Yeah, I loved Yellowstone, and I lived in Montana, so to my mind, a lot of it was accurate. Going into the Capitol building, and yes, you would see guys in cowboy hats walking through, and it seemed to me very, very, very accurate. You're in Texas, Kristen Swenson. Texas is warm and beautiful today, upper 60s. Yeah, here it's almost 70s. It feels like spring right now. Lindsay up in the Pacific Northwest says, oh, it's chilly and rainy. Go figure. JR, 40 degrees in NorCal. I thought a big winter storm was moving through where you guys are. Is that true? Oh. I was having a discussion today with one of our tax planner teammate members on the team, and we were talking about, I brought up the analogy about real estate investing. I said, sometimes you get a CPA, you get a certified public accountant who you work with, and if you're a real estate investor, you'll realize you need to have a great CPA that understands real estate investing. And it's night and day difference. You'll find CPAs sometimes they might be great CPAs, but they just do not understand real estate investing. And then once you start working with a proper CPA that gets real estate investing, it's night and day difference. I don't know why I'm bringing that up. It just occurred to me. Just a little analogy from... because I often get emails from people asking me, many of you who watch the show, what do you recommend as far as, an accounting team and so forth? So just make sure you get great accountants. I recommend, if you go to our website at morrisinvest.com, we've got a lower your taxes tab on the top part of the website. And we work with the team from Wealthability. And we actually have a program set up with them specifically. So if you go to our website, click on the lower your taxes tab here at the top. And then if you want to work with a great CPA team and with a tax strategy team for real estate investors, you just got to fill out this little form here down below. And then you'll jump on a call with them and they'll kind of work you through their tax process. So we have a ton of great resources over on our website. If you've never been to morrisinvest.com, come on over. We've got so many blogs that are really, really in-depth, dense, helpful information for you to get started. Just learning. We have basics, if you're just getting started or you need more dense information about cost segregation and self-directed IRAs, all of that stuff is here on our website. We spend a lot of time working on this website to make sure that it's top-notch for you. All right, let's get started, shall we? Turn off the music a little bit. A little quieter. Okay. 10 inches of snow, Bill? Holy smokes. That's one of those days where you just want to stay inside. Just let it go. Let it snow, let it snow, let it snow. I saw a time-lapse video the other day out of Canada, and this person just had, it was, I don't know, somewhere in Quebec or something, and it just showed it coming in on the front porch, and the front porch, you could see the driveway, you could see the street, and then by the end of the video, the time-lapse, the snow was all the way up to the roof of their front porch, and you couldn't see out. I'm like, you know what? At that point, hopefully you stocked up on some food, and you just stay home for a few days, make a fire, and catch up on some Netflix. That's the way to go. All right, guys, let's do this. Ready? And we're off. Welcome into the Real Estate Investing Show here on YouTube. If you're new to the channel, what we try to teach you here to do is become a more intelligent real estate investor. And this channel is aimed at helping you, even if you're at an advanced level. There's so many great resources here on the channel to help you in that journey, to lower your taxes, how to set up your business entities properly, take things to the next level. But if you're just beginning, great. We also walk you through the process of just getting started. A number of years ago, I didn't know the first thing about real estate investing. And it wasn't until I was in my 30s and I was deciding that I just didn't want to work for somebody else anymore. I didn't want to be at the mercy of a boss telling me what to do. And my fate was in a boss's hand. And I said, I want to build something for myself. I want to build legacy wealth for my family. And I started diving as deeply as I could into building, a net worth through real estate investing and passive income and buying performing assets, because that's where it's at. So on today's show, I want to talk specifically about performing assets. And today we're going to be talking about the housing market in 2022. Specifically, we're going to be talking about new construction, because there's been a number of different pieces recently written. For instance, this struck my eye, front page of the Wall Street Journal. I mean, when do you see a mainstream media publication with a... When do you see a mainstream media publication talking about rental investing? But this is the front page of the Wall Street Journal. And the reason I say that is because most often when you see a mainstream media publication talking about rental investing or investing or the housing market, they're specifically talking about the retail buyer. So today we're going to be talking about the housing market in 2022, specifically the rising demand for new construction rental properties. I mean, just as an example, this front page of this article from the Wall Street Journal, building and rental single-family homes is a top-performing investment. Average risk-adjusted annual return for build-to-rent investments is now about 8%. I kind of chuckled to myself a little bit because what we do at Morris Invest with an internal rate of return with financing built in is going to be double that, or even close to triple that internal rate of return number, well above the 8%. But I get sidetracked here. Anyway, back in 2017, the National Association of Home Builders reported that 37,000 homes were built as rental properties. That was 2017. Then 2 years later, in 2019, that number jumped to 43,000. Now, it's important to note that these numbers include only properties that were specifically built to be rental properties. It does not include new builds that were sold off to investors after construction completed. So clearly, an enormous demand in 2022 for new construction rentals, and the demand continues to grow right now. Let's talk about a few reasons why new construction rentals are so hot. Number one, demographics. Although we're seeing rates of homeownership rise in the millennial generation, there are still a lot of millennials who are renting right now. This may be due to high costs, being tied down by student loans, or the general preference. Regardless, many millennials are moving to the suburbs, and new construction rental properties are attractive. And I will say, right now you've got the baby boomers versus the millennials. And a number of pieces written recently about this dichotomy. Baby boomers have maybe a longer credit track record. They've got money in the bank. So they've been competing with millennials right now to buy first-time homes or buy that home, and millennials are being priced out. With prices going up about 20%, 15-20%, a lot of baby boomers have been able to swoop in and buy up a lot of these homes to live in. So where do millennials go if they can't buy the property? They go into rent, right? They need to rent, and that's why there's an incredible demand, in addition to the already incredible demand because we have an affordable housing crisis. The next thing to consider and to think about in this process is the affordable financing. And you know by now that the interest rates have been at historic lows over the past couple of years because there's been such competitive financing. Lately, new construction loans are no longer limited to these big developers. Smaller developers and real estate investors have access to some of these new construction loans. And these new construction loan offers, they have better exit strategies in general. So if you're doing things correctly, new construction, a safer bet than rehabbing an old property. And a bank is going to look at that through different stages of the construction. They're not just going to hand you a check for the full amount. The bank will often disperse that money in each phase of construction. So really, it is in many ways a safer bet for the bank because they're looking at the demographics. They're seeing this area has the potential. They know what the return will be on that property once it's built. And they're going to be dispersing the construction loan in phases as certain things are happening in the property, signing off on that. In many ways, better than rehabbing an old property because they're just giving you a lump sum and they're hoping for the best. They hope that you know what you're doing as a new construction rental investor. This is true in many aspects, including understanding your exit strategy in general. So let's say you buy a new construction property in a good market. For whatever reason, you decide that investing isn't for you. Well, as an investor, that's a pretty easy way to go and sell a newly built property to a homeowner, right? Newer homes are going to sell way faster than older homes. So as an investor, could swoop in and buy that, or a big scale company. I mean, heck, a lot of these hedge funds are buying up as many properties as they can. Look, I mean, again, this photo shows an entire subdivision basically being built by investors in this Wall Street Journal piece, a Lenore Corp development in San Diego, right? This is traditional home builders, such as Lennar. They've been building rental houses as a component of their business. So these townhomes and these other subdivisions that Lennar is building is available right here, and that's what they're doing, ground up construction, because they know, heck, it's way easier for them to come in and build a subdivision than it is to try to go out and find a random property that needs renovation over here and pick one over here. It's way better for them to come in and buy up land and then build ground up new construction. In fact, Wall Street Journal isn't the only publication that's been focusing on this trend. Bloomberg recently published a piece on why there's never been a better time to be a landlord, and this is because of a huge surge in demand. That's a compelling reason why. In July specifically, the rental occupancy rate hit 97%. One of the big things that we focus on in real estate investing is we want to make sure that the vacancy rate is low, right? We don't want vacant properties. And now we have a nationwide vacancy rate or rental occupancy rate of near 97%. That's astonishing. So even if you're in a market maybe where the jobs aren't there and you're in a kind of a shady market, still people need to live somewhere. So we have an incredible occupancy rate across the United States right now. And here's also some good news on the new construction front. Supply chain issues. concerns about lumber and everything else that we've seen on the supply chain front that have hurt the industry as of late are expected to let up in 2022. We're already seeing some of that in some of the shipping ports as well. Economist Odetta Kushi anticipates the majority of these bottleneck issues resolving this year, resulting in more new construction properties being built. And if you know anything about the real estate market, you know that we have a major affordable housing crisis right now. And so the demand for new construction properties was deemed essential during COVID and during the pandemic. So we were able to keep building because we need housing. And so when we look at bottlenecks, we look at supply bottlenecks, the concerns of the transportation secretary and others are to make sure that materials and those things going to building housing are top of the list as a priority for making sure that people have housing across the United States. And so some of those, I don't want to say special favors, but that's kind of what it comes down to, is a lot of the, like larger new construction we're able to continue on and able to alleviate some of that pressure by having the government also there pushing things through. And if you ever wanted to get into new construction rental properties, I think 2022 is a great time to explore this opportunity. I should say we have an entire library of videos right here on our YouTube channel. We'll link them up in the description below of new construction properties. I want you to spend some time, just go through that playlist. Watch those videos, see what we do. You can meet our new construction team in those videos. You can see clients who come to town and watch the construction unfolding before their eyes. And then also on top of that, meet our property management teams who are then placing tenants in those new construction properties once they're completed, because we have a demand. That's another great thing about new construction, is that tenants want new, right? Tenants love new properties. And so once our properties are done, then the property management team is going to work as quickly as possible to place a tenant in that property. But we have a waiting list as those properties complete because they're in the best school districts. So new, best neighborhoods, it's a home run. And that's one of the reasons why the Wall Street Journal highlighting this as rental and building and renting single family homes is a top performing investment into 2022. We also have some openings right now on our schedule. If you come over to Morris Invest, go to our website and you click on the Book a Call tab. We have some openings on our schedule right now to chat. Just head to our website, click on the Book a Free Call button right there. Pick a time that works for you. We'd love to learn about your goals and help determine if new construction investing is right for you. So just click on that Book a Call button. A little calendar will pop up, and you can choose the time that works best for you and your family. Make sure you put in the right phone number and the correct email address, and we'll give you a call. Our team will give you a call. And there's going to be a few PDFs you'll have to download before our phone call so that you're prepared for the phone call, and print those out, write them up, and then that way when we get on the phone with you, we can ask specific questions about your financial circumstances right now and where you would like to go in the future. All very important in that process. Let me open it up for some Q&A now about this process. See if I can answer any questions here. Let's see. Yeah, we have the new construction playlist there. If you guys have any questions about new construction, feel free to fire them away here in internal. Yes. Sorry, my nose is like super itchy. Curly Vita says, I can't hear the audio. Well, you might have us muted so everyone else can hear us just fine. So just maybe you might have turn up your phone volume if you're watching on the phone, or maybe you've click on the little microphone icon down there and little speaker icon and turn this up there. Michael asks about internal rate of return. That's a great question. Basically, you want to look at internal rate of return that includes everything related to the actual property itself, and it would exclude things like, the reason we call it internal. Okay, this is I think maybe what you're getting at. Internal versus external. I can't control inflation. That's external, right? Maybe there's additional financial risks out there that I can't see. Okay, that's why it's an external. I don't know what's going to happen with inflation. Internally, I know that I'm putting this amount of money down. Okay, I'm going to receive this amount for rent. I'm financing this amount with this type of an interest rate. It's cash flowing a certain amount, and I'm getting this amount back on my taxes because of a cost segregation analysis, or I'm able to depreciate certain things within the property. I like to look at those things. Think of like having a spreadsheet in front of you, Michael, with all of the things we know about this property. And then what is that rate of return based on your down payment? You know, if you're making a $50,000 down payment, that's kind of like an average amount for one of our new construction properties, about $50,000. Okay, based on that amount, and then based on a 3, 4, 5% interest rate on a mortgage, 30-year note or whatever it is, and then based on what can I depreciate in this property in this calendar year because it's new construction. How then do all of those numbers come together to provide me with the return on my money? You know, because we are using financing. It's not cash on cash, right? I'm not buying the property outright for 100% with 100% down of my money. Save your money. Use the bank's money, right? Don't use all of your money. So we always encourage our investors to use other people's money, use the bank's money. It's basically free money right now. Incredibly low interest rates. And even if those interest rates go up a little bit, which they will this year, still historically low, really, really low. So again, even if those interest rates go up, what is your overall internal rate of return? And roughly our low end internal rate of return is about 18%, 18 to 20% internal rate of return. That's how much money you're putting down. That's how much money the bank is, how much the bank is carrying the rest. What is the return on the cash flow from a tenant in the property? What can I depreciate on that property via my taxes? And then, of course, other tax benefits and write-offs as it relates to your home loan, right? Because as you know, write-off of investment interest and so forth. So all of those things go into figuring out the internal rate of return on a property. Now, external rate of return, again, includes things that I can't control. So inflation and other financial risks. I hope that answers it for you, Michael. Crypto Juan says, hey, the properties I purchased back in 2006 to 2008 are back up. It's crazy equity. I was upside down on them in 2013 to 2017. Real estate is very forgiving. Yes, it is, Crypto. I will tell you, I had a property in the hills of Pennsylvania that I bought. And then after we bought it, we got a great deal on it, by the way. I mean, this property we bought, it was on a lake, very beautiful. And then it dropped in value. I mean, it just everything, right? The market collapsed, but it was just fell out. But I didn't care, right? Because that's the thing. When you're investing in real estate, I'm not selling that property right now, but it's still cash flowing. So what do I care what it's doing right now? I asked Robert Kiyosaki, yes, is a friend of mine. I asked him at lunch one time, I said, do you know the value of your properties at all? And he said, no, I don't care. I don't know. Why? Because of the cash flow. He's like, they're all cash flowing. I don't care what the value is because I'm not selling them, right? And so, if you were renting that property, then you got, hopefully maybe cash flow went down a little bit because maybe rents dropped a little bit, but nevertheless, it's still cash flowing, right? Still cash flowing. Who cares about the value? So that property I was telling you about in the foothills of the mountains, then skyrocketed in value. So again, it depends on if you're going to sell it. If you're going to sell it and make a good profit later on, and this is why you should be analyzing your portfolio from years to year after year, and seeing what are the dogs in my list. Can I sell those off and maybe upgrade, or are there ones that have appreciated well beyond the cash flow potential of this property? Maybe it's skyrocketed. Well, maybe it makes more sense for you to take that one property instead of holding on to it, rolling it into a 1031 exchange, and buying 5 properties for that one property because it's shot up in value so much. So maybe the cash flow was good, but it could be, well, wouldn't it be great to multiply that times 5 by buying 5 properties for that one? So we want to analyze our properties and property value from time to time, but not get so caught up in it. JR says, I just closed on my Morris Invest property, and I found out that the tenants were placed just a couple of days before closing on the property. Boom. Yeah, that's what our team aims to do. Depending on weather or holidays, if it's Christmas, maybe tenants don't like to move. So our goal with every one of our new construction properties for our clients like JR is to have a tenant at or as close to closing as possible. Sometimes there's hiccups, just in timing, but mostly we try to get it down to the day. So when you take ownership of that property, JR, you've got a brand new cash flowing tenant in the property. So I love to hear that, JR. That's exactly what we try to do. Sandy Smith says, can I use business credit card to purchase one of your properties? Sure you can. Now there's a service called Plastic, Plastiq, that will allow you to, I've bought properties with a credit card. Remember, when people say you can't do it, they're lying. Again, Robert Kiyosaki, the very first rental property he ever bought in Hawaii, he bought on a credit card. So, plus, if you get points using it too, right? You get airline points or cash back. Imagine that as a vehicle. So a business credit card. But Plastic, I've used Plastic, and what they do is you can pay with your credit card to a closing. So like if you have a business credit card and you want to gain points on your credit card or whatever, you can use that credit or debit card and use it as an ACH or a wire to the title company for closing. So just hypothetically, let's say you had a business credit card that had a $60,000 limit. I'm just making something up here. And let's say one of our new construction rental properties for a down payment on that property was $40,000. 40 is going to be around the minimum. Well, you could use that business credit card, get the airline points or whatever else you're getting, cash back, etc., using Plastic as the company, as the intermediary, and they'll allow you, then you can wire right to the title company for your closing, for your down payment amount, and it comes right off your credit card. And then you just pay your credit card back. You could pay your credit card back using, whatever other means you have. Maybe you have cash already on hand, but you just wanted the airline points. So that's what we would do. We would use that as a closing to buy the properties, because we knew we would pay it off with cash that we had separately, but now we got all those airline miles. So we were able to travel to Italy for free on airline miles because of that. So you start to think strategically about how to use those business credit cards, like the American Express Gold Card is a great one. Cashback rewards. There's even here's a trippy one. I have a link. We'll put it in the show description here for you. I don't have it handy though, Kelly. We have a link where you can get, if you use a BlockFi. BlockFi is a crypto account. They have a crypto credit card, and you get free Bitcoin with like cash back, but instead of cash back, they give you Bitcoin. And think about Bitcoin right now is at $40,000 a Bitcoin. So, imagine buying a house with a credit card for a performing asset, and then as your cash back, you're getting Bitcoin. Anyways, think about these different ways and creative ways you can do this stuff. It's pretty exciting. Collins says, in the process of with Fund and Grow and getting unsecured business credit or opening Heloc while housing market is still high, more of a priority. I would say the Heloc is more of a priority, Colin. A Heloc is one of my favorite ways to use the equity in your property. I mean, hey, I don't want to discourage you. Go and get Fund and Grow funding as well. Like I use them, and it's always great to have additional capital, right, for different things. So by all means, but a home equity line of credit, you're sitting on equity right now in your home to be able, or rental properties that you already own. Tap into that equity, in my opinion. Again, I'm not a financial advisor, so do your own due diligence. But in my opinion, if I had equity in my home, I'd be tapping into that using a home equity line of credit in order to buy additional properties and performing assets. Great question, Colin. Have you read our book? We address this specifically in our book. I think our book is $4 on Amazon. It's the #1 rated book in the mortgage section on Amazon, by the way. Let me pull it up here. We're actually working on a new edition of it, but a lot of the same principles hold. So we have our older edition here, which is the yellow cover. But our newest edition is the 2019 edition right here. How to pay off your mortgage in 5 years. Slashing your mortgage with a proven system the banks don't want you to know about. So this system works, guys. And in the book, we cover that exact question, Colin, about using a Heloc, to buy more investment properties or paying down the principal balance of your primary residence. Oh, you just said, I'm sorry, I didn't read the last sentence. You said, love your book, How to Pay Off Your, sorry. Sorry. Yes, there's a link right there, Aaron, above. Kelly just posted it in the chat. There's the link. Sorry, Colin, I jumped ahead. I didn't read the last sentence there. Does it make more sense to use a Heloc to buy more investment properties or pay down the principal? I like to say yes. My answer to that is yes. Both, in my opinion. Because I think there's no reason you have to go all in on one way and not do another way, right? You can absolutely use the home equity line of credit to use as a down payment to buy a performing asset, right? Also use a piece of that. Maybe it's 5,000, maybe it's 10,000 of your Heloc, and fire it at the principal balance of your mortgage. Remember, with a primary mortgage, a 30-year or a 15, it's an amortized mortgage, right? It's different than a home equity line of credit. Think of a home equity line of credit like a credit card, okay? And an amortized mortgage in a house that you live in is a different financial vehicle. And what you're simply doing is, anyone who tells you that you can't do this is full of garbage, okay? Full of crap, because it absolutely works. And what you're simply doing is trading intelligently one financial vehicle for another, or financial product, I should say. You're kind of utilizing one, you're robbing Peter to pay Paul, okay? And banks don't want to talk about this. They don't want to bring it up. I've written a book on it, and it's highly successful system that actually works. There was someone on Twitter just the other day who tweeted at me and said this was, and I was really touched by this, said this was the most impactful book that they had ever read. It changed their life. Let me see if I can find it here. Not to toot my own horn, but this is the whole reason we wrote the book, is to help people pay off their mortgage in 5 years. Instead of these banks taking advantage of you. Why should a bank make an additional $200,000 off of you because they're stretching this thing over 30 years? Wouldn't it be great if you could accelerate that process and get it down and pay it off in 5 years? So let me see if I can find this tweet, because he put it nicely, and we all need a pat on the back occasionally, right? And see if I can find this. Where did he tweet this? He tweeted it right around Christmas time, so it made me extra happy. See if I can find it here as I pull up other questions. What do you think is the best credit card out there for travel and points? Schwing wants to know. It depends on what you like to do. For instance, like if you're a Disney family, right? We like Disney. We go to Disney, right? We just went to Disneyland Paris with the kids. We like it. Some people hate it. I enjoy it. So maybe there's like a Disney card that would work for you. You would get a free like Disney vacations with your family, right? So it's really a personal thing. From a business perspective, I would say there are a few at the top of the list. I would say, and NerdWallet usually has a good, or the Points Guy, thepointsguy.com has good website breakdown on that. Here is the tweet I wanted to show you from A Cultivated Man. He writes, the single most impactful personal finance book I've read in the last 5 years. I decreased my mortgage balance by 50% in more than 1 year following Clayton Morris's method. And I retweeted it. So anyway, I don't know who that person is, but if you're watching the show right now, thank you for that very kind tweet. Proof in the pudding right there. So it can be done. American Express Gold Card is a great one. Let me pull up the Points Guy. You have to be careful. Points Guy. Some of these websites like this will often have like affiliate links as their top ones. So they make, let's see, best business cards. Sometimes they make good commissions by recommending it. So when you go here and you click on this, you're going to give that the Points Guy some kickback, Hey, that's fine, right? He's done the work. He's done the work to put together a website that brings you value. That's fine. But I just would analyze to make sure that this, in fact, is the best one. I personally use an Amex Express, American Express Gold. I don't use the Platinum one, so this might actually be better. I've heard great things about the Ink Business Preferred as well from Chase. This is the one that I use here for points and rewards. 25% airline bonus and so forth. So, and there is an annual fee as well. So remember, there's an annual fee for some of these. So the less of the annual fee, the less you get, right? So this one has 3.3%, three times points. This one has 4 times points. But again, I also have a BlockFi account. And that gives you, BlockFi gives you Bitcoin with a credit card. So see, they have on BlockFi, this is crypto card, their BlockFi. So earn 1.5% back in Bitcoin. I'll send you the link. We'll put a link in the description for this BlockFi. It is an affiliate link, but you also get additional money on it. I've never actually recommended it yet, so I don't know like what, but you get extra. I think maybe like a $50 sign up bonus or something like that. I don't even know, but so I guess it depends on your lifestyle. What do you like to fly? Maybe you're like some people I know that don't like to travel at all. They don't care about traveling to Europe or going anywhere. They're fine to stay in Florida or whatever. So if that's you and you don't care about that, then you may want to think about, well, maybe cash back is better for you, and getting that cash back instead of airline points. So things to consider for your lifestyle, I would say. Let's see. Dennis Cole says, what do you think about hard money loans? Do we have any videos discussing those? I believe we do. Kelly, do we have videos here on the channel about hard money loans? I have thoughts on hard money. It depends on what the loan would be for. Would it be to buy a rental property, or is it for you to use to invest to do a fix and flip? Different things to consider there. Hard money loans can be expensive, and especially like if you have to put points, like they want to do 1 point or 2 points, which can be like 1% of the entire loan, which is crazy, plus 10-11% interest or something like that. So just shop around. Yes, there are some good, like my friend Kyle JC. What is this? New Jersey Lending Partners, JC Lending, New Jersey. No, it's. I don't have it in front of me, but do we have Kelly? If we have a link to videos on that, we'll put it in the chat here. Aaron writes, we plan to buy our first house this year. Grover likes that. Yeah, Grover. Let me bring up the chat overlay here so I can see this better. All right. Aaron writes, we plan to buy our first house this year. Would it be smart to reduce expenses, invest in stocks or crypto for 4 to 5 years, then use that money to buy rental properties, thinking a 5-year plan? Well, if you're asking my opinion on like what I would do, I'm not a financial advisor. I would be avoiding the stock market like the plague. Okay. We are about to see a major, if you listen to the pundits, you look at the data right now, specifically on stocks. And when the Fed balance sheet starts to decrease, there's a direct correlation between the Fed's balance sheet and these companies, these Wall Street companies doing, it's like it's a 1-for-1. Fed balance sheet goes up, stock market goes up. Same thing. And so as more debt that the Federal Reserve keeps on its balance sheet, buying up crappy bonds, keeping Wall Street artificially afloat, these businesses are taking on way more debt than they are bringing in profit. They're buying shares back. we are on the precipice of a major, in my opinion, a major pullback in the stock market. Personal opinion. But I think the data suggests that that's the case. China is sitting on a massive bubble, arguably the biggest bubble in world history, with what's unfolding with China and their real estate. So I do not want to be over leveraged, and I don't want to be overexposed in the stock market. Maybe a little bit of your portfolio in some safer plays that are tied to reopening plays, perhaps. But again, up to you in that regard. Maybe some, construction plays, things like that. Okay, but broader tech stocks, things like that, I would I would caution you, in my opinion. Let me just reread that again. We plan to buy our first house this year. Would it be smart to reduce expenses? It's always wise to reduce expenses, especially if they're liabilities, Aaron. Thinking about, if you're wondering, or you're worrying about getting a loan, and you're worrying about, okay, can I get the best loan possible because I have a high debt to income ratio? Yes, absolutely, right? We don't want to live beyond our means. So anytime we can reduce those overall liabilities, those expenses, that's always going to be a smart play. And, look, I think if you can day trade and that's a fast way to make money, if you're smart about it and really study it, then yes. But I think putting a lot of your exposure into stocks right now, I would caution you. And crypto too is incredibly volatile. Like if you have a stomach for 30% pullbacks in Bitcoin, right? We see it every day, right? Huge $2,000 swings in Bitcoin. That's a 35% pullback. Like, can you stomach that? I would just be very careful about that. Or can you be putting your money into a vehicle that will provide you some kind of return on that cash sitting in a savings account or a savings account alternative right now, in the meantime, while you're using that to save up for like a down payment? Something like Outlet Finance I use personally. It's like a 9% return. Think about when you have like a savings account, which is like 0.0001% or something. So if you go to morrisinvest.com/outlet, I use that. That's a 9% interest savings account, and it's backed by cryptocurrency. So it's actually tied to Ethereum, or staking, buying crypto that you're staking. So you're not actually trading, but you're buying maybe Ethereum and you're staking Ethereum or some other crypto. So you're not actually trading it. You're holding it. It's staked and it's earning a nice return on investment over the next few years while you put some of that money aside. So maybe looking at some of those options just a little bit safer right now. Kevin says, let me pull up Kevin's here. Kevin, crypto's already had a pretty drastic correction. Do you think it will correct more before going back up? Are we getting close to the low? I think we're close to the low. I don't think we've hit, well, if you're talking about Bitcoin specifically, I don't think we've hit that bottom leg yet. Still hovering around that bottom leg. We saw an explosion, some altcoins over the past few days. Obviously, Cardano and others are taking advantage of this volatility in Bitcoin. But again, if you don't have the stomach for it, 30% pullbacks. And by the way, the United States, I'm telling you, the regulation that is coming in the United States around cryptocurrency is going to be big. It's going to be big. And right now you have a lot of these companies are saying they don't even want to do business in the United States on the crypto space. So if you're in the United States, it's going to be difficult. It's going to be really difficult. And a lot of this regulation that's going to be coming down the pike very, very soon on crypto in the United States is going to affect a lot of people. Let's see. Well, thank you guys. Hopefully I got most of your questions answered today. Oh yeah, Crypto wants that. I actually used a Heloc back in the day in 2006 and used it as a down payment on those properties. Good for you, man. So again, if you guys want to take action and you want to book a call with our team at Morris Invest, that's what we do. We help you for free. We'll jump on the phone with you and point you in the right direction. And hopefully you can either work with us or we'll be able to guide you the right way So if you're interested in becoming a real estate investor and you want a team that will hold your hand through the whole process, we are a full service rental real estate company with outstanding internal rates of return where you own the property 100%. It's yours. We just help you the entire way, and we want to help you build an entire portfolio of properties and help you on that road to financial freedom. So just come on over to morrisinvest.com is the website. You'll see a little video there, a little welcome video. You can see all of the reviews here. We can click on the reviews page. You can see all of the people that have just bought properties within the past few months with us and hear their stories, watch their testimonials. People from all walks of life. We've got a teacher there from Jarrett down in Florida. Norvella works in the criminal. She works in criminal justice system in California. She's flown to town. She's met our team. Larry is a long haul truck driver. We have people John is actually, he's actually standing in front of one of his rental properties in Texas. This is John right there, standing in front of one of our rental properties, right there. So you can watch his. These are some of our new construction duplexes. He's standing right in front of it, looking at his property. So anyway, check those out. Go to morrisinvest.com. You can see our new construction properties. You can hear from our clients, and we're happy to help you take that next step to become a real estate investor. So go out there, everyone. Take action. Become a real estate investor. I believe it's the #1 way to build wealth. And I will see you next time here on the channel. We'll live here. We do these live streams every Tuesday at noon Eastern time. So much love to all of you. And we will see you next time, everyone. Bye now. Stay warm. Stay warm wherever you are.